Welcome and thank you for joining me today. This is our monthly catch-up session, and for today we will have our guest Eben Mare joining us to answer some interesting questions that I will be throwing at his way to hear his views on the economy and certain topics that has been coming our way when it comes to the investment world. Eben, thank you for joining me today. It's always fun to have you and to hear your views. If you don't mind me just asking you to give an introduction to the clients, exactly who are you and a little bit more about yourself.
So Jaco, thanks. It's a privilege to be here. As you mentioned, I'm Eben Mare. I look after the absolute return funds. So one of the funds that you specifically would look at is the ABSA Inflation Beater Fund. Our typical objectives are to try and beat inflation by a certain percentage, at least, over time, as well as to preserve capital, which we find very important.
Thank you. Eben, so I think on those bases, let's start off by touching some of the subjects that's currently some hot topics. I think South Africa is currently quite in the media regarding the, let's call it, stance of the current war between Russia and Ukraine, and that's of course having a little bit of an influence on our markets. Can you please just share your view on what is that impact? If it's got a big impact, is that impact sustainable, and how do you position yourself regarding that?
Yeah, it's an excellent question, Jaco, and it's very topical. I think the problem is we've probably all been felt disappointed about the fact that we've not come out with a neutral stance and actually done something about it politically. But I think the May was a specifically bad month where we've heard the American ambassador make certain allegations, and it's walked through the markets with the view that we might even have sanctions imposed against South Africa in some way or the other. But in diplomatic circles, we don't necessarily say something against every war. And what I'm trying to drive at is, I think in the longer picture, is that we don't get too negative. So I think we need to be careful to sit and think that South Africa is suddenly going to have long-term withdrawn sanctions against South Africa. I think some of that you saw in the movements in the currency in May. The currency has moved back a bit of late. It's hard to predict this, you know, so you've got to actually just sit and say, look, what is the view here? What is the longer-term view?
Yeah, but then currently with that being dealt with, what is your views from an equity perspective for this country for the next few months, up to, let's maybe call it 18 months for the equity market?
There are a number of factors that you've got to take into account when we look at an outlook for equities. Number one is what's going on in the world, and number two, what goes on in South Africa. Because there's two factors involving in South Africa, and one of them pertains to some of the exogenous factors like the Russia story, but there's also the energy crisis that we are living through. The pace at which interest rates have been tightened is what concerns us. And there are really two things that you need to look at with interest rate increases as far as equities are concerned. At the onset of your interest rate increasing cycle, you've got economic activity in abundance. That's why you've got a demand for the money, for money, and you've got inflation starting to raise its head. And that's typically when central banks start conveying the message that they will be increasing interest rates. The problem here is that this goes with a lag. So typically monetary policy historically has worked with a lag of anything up to about 18 months. So we started raising rates last year. You will only see the effect of that now and for the balance of this year.
Just before we go back to South African markets, the US has increased their debt ratio again. What's your view on that? Do you think they are still able to maintain and to manage that, or do you think they're actually getting to a place that's quite dangerous?
Worldwide, we've got that we've had an increase of debt. The US is in a less comfortable position. I think their public debt to GDP is close to 150% at the moment, which becomes problematic, especially from the perspective of servicing of that debt. If you had that a year ago, 2 years ago, your debt cost was 1%. It's now 4%. So you can see how that has increased, and that's what actually crowds you out. We've got a similar thing in South Africa, that we don't have such a lofty debt to GDP, for example, but our debt servicing cost is actually the thing that crowds everything else out.
Can you maybe just give us a little bit of your view of what do you see when it comes to interest rate hikes for the next few months?
Inflation has definitely turned, but it is turning much slower than central banks would like to have. So you've got inflation sitting with more than double where the central bank wants it to be. So it doesn't matter that it's on a downtrend, it's not trending back fast enough. The point is that inflation has become stickier, and some of your components, like your service-driven inflation, is now what's driving inflation higher or keeping inflation at a higher level. So that's the US. Unfortunately, South Africa is a bit of a price taker in this war against inflation. And what I mean with that is, if the US continues to hike, we will likely follow suit, and it hurts.
What would you say the rand versus the dollar should be according to you?
The rand takes the brunt of a lot of the collective aggregate frustration in South Africa. There's no doubt that where we traded at 19 rand 50, 1965, I think was the top recently against the dollar, that was way too cheap against the dollar. As we speak, we're sitting at about 18.15 versus the dollar, so that feels a bit better. That's still too cheap. So fair value is probably something closer to 15.50, but you probably can see that the rand could get back to 17 rand 50 or 17 if we don't shoot ourselves in the foot.
What's your view on, let's call it, the larger listed companies? Are they able to sustain production, or are you guys seeing also to say that they will have a lot of challenges and certain losses in the future based on that?
Jaco, when you listen to companies present their financial results at the moment, all of them without fail have an energy line where they throw in, this has been how difficult it's been to operate. So the reality is, this has been a crisis for everybody. It's not the first crisis that we've had in South Africa, and we've navigated through that. I have full conviction that South Africans are resourceful, and we will solve this. The government, in the last budget statement, the Minister of Finance gave an attractive incentive for solar installation, for example. I have no doubt companies will make use of that.
I'm going to close off by saying one of South Africa's saving graces is our private sector. For as long as the private sector can benefit from something like energy crisis, I believe that we'll see light in the end of the tunnel. Eben, thank you for joining me today. It's always, as I said, good to see you. Nice catching up with you.
It's a privilege.
That's it for this session. Thank you guys for joining us. We'll be back next month with a new guest and sharing their views with what's going on in the economy. Thank you. Goodbye.